This is the Southside School of Financial Freedom Watch List and Market Report for the week ending August 21st, 2021. Our question this week is, what is scared money? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average increased 0.65% on Friday, but was down minus 1.11% for the week. The S&P 500 increased 0.81% on Friday, but was down minus 0.59% for the week. The Nasdaq increased 1.19% on Friday, but was down minus 0.73% for the week. Looking at the week, we can see that there were 7 up finishes versus 8 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday and Wednesday, all 3 major indexes finished down. On Thursday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. And on Friday, the 3 indexes all finished up. The new unemployment claims were 348,000 versus 365,000 expected. Treasury yields started the week lower. Home builder sentiment fell to its lowest level in over a year. Mortgage rates hit their highest level in a month as weekly demand dropped. Retail sales declined 1.1% in July, and the Department of Education announced that it would cancel $5.8 billion in student loan debt. New unemployment claims, U.S. Treasury yield drops, home builder sentiment, monthly mortgage rate changes and demand, retail sales declines, and the cancellation of student loan debt are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is scared money? Investors who are quick to sell their stocks when the price of the stock goes down are said to be investing or trading with scared money. That is, they are investing with money that they are afraid to lose. Most seasoned investors and traders state that you should not invest money you are afraid to lose. Investing with money that you are afraid to lose may cause you to sell a stock too early, as stocks usually have pullbacks. That is, they go down before going up to higher levels. Scared money don't make money is a popular saying. Are you afraid of losing money in the stock market? The key to making money in stocks is not to get scared out of them. Are you investing with scared money? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor. which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not teach you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending August 21st, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the second column. It increased 3.15% for the week, and it was up 5.57% on Friday. Grayscale is an investment vehicle that is similar to an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safeguarding Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased almost 24% year to date. I own Grayscale shares. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 Index ETF SPY. The Southside portfolio is up 0.82% versus 18.58% for SPY, a difference of 17.76%. The Southside is losing to SPY by almost 18%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit for a few months. However, it has been recovering for the last month or so. Will the recovery continue? We'll see. The portfolio is 70.32% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 28.87% of the portfolio. Cash is 0.81%. The cash flow generated for this week was 0.54% of the portfolio account value. The account value changed by 1.36%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.57%. I sold option contracts on 2 positions this week. They were both calls. That ranged from $233.37 to $403.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Please like, share, and subscribe.